Welcome to SenseTalking. On the deep dive today, we take a look at fraudulent practices by Capital.com.
Indeed. Our source is a YouTube video, the Capital.com trading scam by Jordan Bishop.
Right, and our mission today is really to get under the hood of these allegations against Capital.com. It's all based on Jordan's own experience and what he dug up.
He definitely lays out a pretty compelling and frankly disturbing narrative.
Let's actually play a bit from the start of his video where he talks about finding his account drained.
Imagine waking up one day to find your trading account drained, not by the market, but by your broker. I can tell you it's not a good feeling, and it's the reason I want to tell you my story with Capital.com, the trading platform that held hundreds of thousands of dollars of my money hostage.
Okay, wow.
Yeah.
Systematically drained by your broker. That's a heavy accusation right off the bat.
It really is. And then he talks about how they sort of gaslit him, made him feel it was his fault.
I'm going to share how Capital.com lied, cheated, and stole from me for months while convincing me that all the obstacles between me and my money were my fault.
That feeling of being manipulated on top of losing money.
And it gets worse.
How they slowly emptied my account into their own, and how they blocked every attempt I made to withdraw what was left of my money, feeding me excuse after excuse until I finally learned they never intended to give my money back at all. And
It's a shift from incompetence or error to, well, alleged intentional fraud.
Exactly. And finally, he found he wasn't alone.
the worst part, this isn't just happening to me, because once I started digging, I found case after case of other investors facing the exact same nightmare. Accounts frozen, funds locked away, and Capital.com expertly leading them into believing it was all just a misunderstanding.
Finding those other cases must have been, well, validating in a grim way, but also suggests a pattern.
So the big question hanging over all this is, what actually happened with Capital.com and how credible are these claims?
Well, let's start with his background with them. He wasn't a newbie. He'd been using Capital.com for over 5 years.
Yeah, and he says the first, 3 or 4 years were mostly okay, relatively smooth sailing.
Right, which makes the change he describes when things started to get weird, as he puts it, even more significant. It wasn't bad from day one, apparently.
So what was the first weird thing? He talks about these overnight fees.
He noticed his account balance dropping daily, sometimes by quite a bit, while he was asleep.
And crucially, he says these weren't trading losses. This wasn't him making bad bets.
Exactly. Now, overnight fees, or swap fees, are a normal part of CFD trading if you're using leverage.
Right, because you're basically borrowing money from the broker to magnify your position, so you pay a kind of interest on that borrowed amount if you hold it overnight.
Precisely. But Jordan's claim, the really core issue here, is that Capital.com started charging him these fees on trades made with 100% his own money.
Unleveraged trades?
Correct.
Yeah.
No borrowed funds involved. He even shows, examples over $200 in fees in just one night.
And it added up, didn't it? Over $17,000 in about 2.5 months?
Yeah, a staggering amount. And his confusion seems totally justified. Why would you pay interest, effectively, on your own deposited cash?
It's like he said, imagine your bank charging you interest just for holding your savings account balance. It makes zero sense.
It really doesn't fit the standard model at all. It immediately raises questions about their fee structure, transparency, everything, really.
So he contacted his account manager, this guy named Vlad.
And Vlad's response wasn't, oh, that's a mistake, let's fix it.
No. Apparently Vlad was defensive.
I thought he would say, of course this is a mistake, let me fix it right away. But that's not what happened. Instead, Vlad got super defensive, and he told me that Capital.com had the right to charge overnight fees even on my own money. That in itself was already as big of a red flag as I could imagine, but here's the kicker. I noticed that Vlad also asked me a very specific question. If you don't want to pay the fees, why don't you just close your positions?
Maybe.
And then Vlad suggested that if Jordan didn't want the fees, he should just close his positions.
Which sounds simple, but you have to remember how CFD platforms often work. You're not trading on an open exchange. You're often trading against the platform.
Exactly. The broker can be the counterparty. So if the trader loses money on a position, the platform itself might actually profit from that loss.
And the positions racking up these huge, weird fees, they were Bitcoin positions.
Right, and Jordan mentions they'd been in the red losing positions for over a year.
So Vlad saying just close them would mean Jordan locks in those big losses.
Which could potentially be a direct financial gain for Capital.com if they were indeed the counterparty.
So was it just a coincidence the fees started piling up during a Bitcoin slump? Or was it maybe a strategy?
That's the million-dollar question, isn't it? Jordan leans towards the latter, that they deliberately used these fees to force him to close positions that were costly for them if Bitcoin recovered.
Even if it was a coincidence, charging fees on unleveraged funds is still, well, it feels wrong. Unethical, at least.
Absolutely. Either way, it doesn't look good.
Yeah.
The outcome for Jordan was losing $17,000 just in these fees, feeling forced to close his Bitcoin trades.
And then, salt in the wound, Bitcoin's price shoots up afterwards, and he missed out on all those potential gains because he'd been forced out.
Yeah, the opportunity cost on top of the direct fees. It's a double hit.
Understandably, after all that, he just wanted his money out. Trust was gone.
Makes sense. But that's when the next set of problems started.
He said putting money in was always easy, smooth. But getting it out? Suddenly impossible.
That's such a classic red flag, unfortunately. Easy deposits, nightmare withdrawals. We hear stories like that too often.
Vlad apparently gave him this really bizarre reason for the failures. Something about withdrawal limits tied to deposit sources.
Yeah, the proportionality thing. Like if you deposited $1,000 each from 5 different bank accounts or cards.
Totaling $5,000.
Right. And say your account grew to $10,000. Vlad apparently claimed you could only withdraw a maximum of $2,000 back to each of those original 5 sources.
Latch. Why? Why should the source you use to put money in dictate how you take the total balance out, especially profits?
It seems completely arbitrary and, frankly, designed to create problems.
Yeah.
There's no standard financial logic for that kind of restriction on a total account balance.
And Jordan saw a really worrying implication here. What if one of those original deposit methods wasn't valid anymore? An expired credit card, a closed bank account?
Then, according to this logic, that corresponding chunk of your money would be just stuck, stranded in the account.
That's what he claims they told him, which is terrifying. It sounds like a way to just trap people's funds.
It certainly raises serious concerns about whether the platform could effectively confiscate funds under this pretext.
And in his specific case, it got worse. He found out Capital.com had, apparently without telling him, disconnected most of his original deposit methods internally.
So only one small source was still active.
Yeah, representing maybe 5% of his initial deposits. So Vlad tells him, okay, you can withdraw that 5% now, but the other 95% needs investigation.
Wow. Disconnecting payment methods silently and then using that as a reason to block 95% of a withdrawal. That sounds incredibly suspicious.
Felt like he was getting the runaround. Months apparently went by.
Excuses like the back office team is looking into it.
Yep, or blaming bank issues, which Jordan says he later proved weren't true by checking with his bank.
And couldn't get past Vlad. No supervisor, no other support channel.
Apparently not. Everything just got routed back to Vlad, who kept giving, rehearsed-sounding excuses.
That's another common tactic in these situations. Isolate the customer with a single point of contact who controls the information flow and prevents escalation.
He described having to jump through all these hoops, too, like providing new bank details, only for Capital.com to say they couldn't send it there.
And the Wise account. They kept saying it was impossible.
Repeatedly. We can't send funds to Wise. It's impossible for all customers. Something like that. It felt very much like they were just creating obstacles.
Building a case to blame the customer, perhaps, for the withdrawal failing. See, we tried, but your bank details.
Exactly. But then things changed, didn't they?
When he mentioned legal action.
Yeah. He tells Capital.com he's lawyering up, and suddenly, poof, the withdrawal is processed.
And where did they send the money?
To his Wise account. The very account Vlad had insisted over and over was impossible to use.
That is incredibly telling. The sudden reversal, the use of the impossible method, all happening right after the threat of legal action. It strongly suggests the previous obstacles weren't genuine.
Jordan certainly concluded they were lying and just trying to keep his money. He then zooms out a bit, talks about Capital.com being based in Cyprus.
Right. And he flags Cyprus as having, in his words, notoriously loose financial regulations compared to, say, the UK or US.
Implying that maybe they can get away with more there.
Well, the regulatory environment is absolutely critical. Less stringent oversight can create more room for questionable practices. It means investors might have fewer protections or avenues for complaint compared to dealing with a broker in a stricter jurisdiction. It's definitely something people should consider.
He also started finding other people online telling similar stories.
Yeah, he mentions Trustpilot reviews, talking about withdrawal failures, demands for endless documents.
People saying they were taking legal action too. Reddit threads detailing the same kinds of withdrawal nightmares.
Even Google Maps reviews, apparently. He found complaints there, too.
And he points out something interesting about the Google reviews, a lack of high ratings for a long time, suggesting maybe a past campaign of fake positive reviews had stopped. Hard to know, but suspicious.
It's the pattern across multiple independent platforms that's significant. When you see the same type of complaint, difficult withdrawals, poor communication popping up again and again, it lends weight to the idea that it's not just one person's bad experience.
He highlights one specific Google review from Mpana, who claimed Capital.com liquidated their crypto holdings right at a market low point.
Which echoes Jordan's own experience of being pressured to close his losing Bitcoin positions, though the details might differ, like leverage.
Right. And this Mpana reviewer also apparently noted lots of suspicious-looking 5-star reviews on Google Maps.
Like single reviews from people in completely different countries, all written in perfect English, maybe.
Yeah.
That kind of thing can look artificial.
Yeah. So Jordan's final take is pretty brutal. He basically says Capital.com's business model is getting deposits and then keeping the money, either through unfair fees or just blocking withdrawals.
He calls them a parasite, not a real trading platform. Strong words reflecting his experience and findings.
His advice is simple. Don't do it. He believes they'll find a way to take your money.
It's a stark warning based on a very detailed account of alleged malpractice.
And he says he's got more coming info on a law firm apparently putting together a class action suit and a look into the people running Capital.com.
A class action would definitely indicate this is potentially a widespread issue affecting numerous clients. It adds another layer of seriousness.
Okay, so just to wrap up the core allegations from Jordan Bishop, we have these huge questionable fees charged on his own, unleveraged money, a withdrawal process that seemed deliberately obstructive, full of delays and, frankly, lies, and a whole lot of other users online reporting very similar problems.
That covers the main points, yeah. And the context of where the company is regulated, in this case Cyprus, is an important factor to consider regarding oversight and potential recourse.
It really hammers home how careful you need to be, doesn't it? You absolutely have to do your homework before choosing any online trading platform.
Absolutely critical. Look beyond the slick ads. Check independent reviews, lots of them. Understand the fee structure inside out. Know where they're regulated and what that means for you as a customer.
It's crucial diligence. So after hearing all this about Jordan's experience and the allegations against Capital.com, it leaves you wondering, doesn't it? When you're an individual investor, maybe dealing with a platform based overseas, what real options do you have if something like this happens?
That's a tough question. Cross-border disputes can be incredibly complex and expensive to pursue.
Right. And it makes you think, are there bigger systemic changes needed in this online trading space to give investors better protection, especially when dealing with platforms operating under looser regulations, something to mull over?
Capital.com encourages you to deposit as much money as possible, and then, if they aren't able to steal that money from you through fees, they just won't let you withdraw it. So don't misunderstand things. My situation is nothing unusual. It's actually par for the course for Capital.com. Stealing your money isn't out of the ordinary for them. It's their entire business. Well, Capital.com isn't a trading platform. It's a parasite. And so if I could give myself one piece of advice before signing up with Capital.com, it'd be simple. Don't do it. They're going to steal from you every chance they get. And when they can't steal anymore, they just won't let you have your money at all. Any profits you might earn from the platform will be taken back in the form of fees. And even if you have a good run with them for a while, let my story be a reminder that eventually they'll turn on you too.